Frontline stocks push higher even as the broader markets are evenly balanced on advances amid declines. The positive net foreign flows help buoy sentiment even as tariff uncertainties continue to loom.
Trump announces the imposition of 25% tariff on all car, LCV and auto part imports into the US from April 2nd, spooking auto stocks. Tata Motors, that's the key loser on fears of tariffs denting JLR sales.
Wipro has bagged a hefty $650 million 10-year digital transformation deal from the Phoenix Group in the UK. The stock perks up on the win.
In a significant milestone for Maruti Suzuki, Sunil Kakkar becomes the first executive to be appointed to the company's board. Meanwhile, the FMCG leaders HUL ropes in Britannia's Rajneet Kohli to lead its food business.
And CLSA's chartist Loris Balanko believes that the market has bottomed out and expects the Nifty to scale to 26,000. But Goldman Sachs' Sunil Kaul advises caution on tariff uncertainties and the domestic slowdown.
Hello and welcome to Halftime Report. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Hormuz. Well, Hormuz, not such a bad day, right? We woke up to the tariff news and Trump appears to be quite serious, at least on a few products, and at least for now. But that dip got bought into. And earlier this morning, we had made that one point, that if the Nifty needs to do well today, it appears that the Nifty Bank will have to lead the way. I'm glad that's the way it played out because that was the big call this morning.
Tariffs what? Is what the street is possibly asking right now. But yes, other than some specific stocks, of course, it has been a fairly okay day for the benchmark indices, especially considering the fact that it is the monthly expiry as well. And we are looking to break that 5-month losing streak on the FNO side of things, and 23,600 is where the Nifty is 100 points higher. You would take that with both hands considering the overnight developments on the tariffs front, also on Wall Street as well. Of course, there are names like Tata Motors that are still continuing to struggle, 6% lower on the stock. Even now, Sona BLW is down 4.5 as well. So there are some names that are still bearing the brunt of this tariff uncertainty. But of course, there are a lot of other names that are doing well for themselves as well in today's trading session, particularly from the broader markets. There's the fact like Capri Global, RHI Magnesita is up 8.5% as well, Nigel. And speaking of these auto names as well, and it is Tata Motors and Samvardhana Motherson, both of them and a lot of others as well. Most of them have recovered from the lows, and that is after the US announced that 25% tariffs on imported autos. Sudarshan is here with more details and the potential impact that it could have on these companies. Sudarshan.
So auto sector is under pressure in today's trade, and most of the stocks have recovered from intraday lows. But two stocks that are still under pressure, and one is Tata Motors, which is down more than 5%, and Samvardhana Motherson is down almost 3%. And this on the back of announcement by US President Donald Trump, who has announced that there would be a tariff of 25% on all the cars which are not made in the US, and those tariffs would be effective April 2, and tariffs would also come for the auto parts. Now, why these two stocks are majorly in the focus? Tata Motors, because JLR has USA as one of the important markets, and which forms 1/3 of its total sales. Also, the most important point is JLR does not have any production facility in the US. All the cars that JLR sells in the US market are imported by other countries. That's the reason Tata Motors is under pressure. Next up is Samvardhana Motherson. So US forms nearly 40% of its total sales, but that's not the important point. Important point is Samvardhana Motherson supplies auto parts to all the major automakers which export to the US market, and indirectly it's been likely there might be impact on Samvardhana Motherson, which can be in the range of 6 to 7%, and that's the reason Samvardhana Motherson is under pressure.
Indeed, Sudarshan, thanks a lot for that. Now, in fact, let us also listen into what President Trump said on these auto tariffs.
We're going to charge countries for doing business in our country and taking our jobs, taking our wealth, taking a lot of things that they've been taking over the years. They've taken so much out of our country, friend and foe, and frankly, friend has been oftentimes much worse than foe. And this is very modest. And what we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We started off with a 2.5% base, which is what we were at, and we go to 25%.
Well, sticking with the auto stocks then, Ashok Leyland plans to shut down its Switch Mobility UK facility. In fact, earlier today, we spoke to Mr. Shinu Agarwal, the MD and CEO of Ashok Leyland. He spoke about the UK facility shutdown and also addressed investors' concerns around the promoter pledge. Let's listen in to what he had to say.
We had been making losses in the UK for many years now, and after having tried several things, we have taken a decision to start this consultation process, which might lead into cessation of the manufacturing and assembly activities in the UK. Of course, we are not exiting the market. In the recent past, we have been making about 2 to 3 million British pounds of losses every month. Now, the number varies depending on how much orders we have in hand and how much we can fill up our capacity. But that is the broad range between 2 to 3 million pounds per year. And of course, once this consultation process is over and we have complete clarity as to which way it will go, we think that most of these losses should be behind us now. The Hinduja Group has many businesses outside Ashok Leyland, right? And many of these are doing very well. Secondly, I would say that, we are really not privy of the matter as to what is the usage of these funds. But of course, if we get to know more, we'll be very happy to share with you. And finally, I would say that, during various interactions with the promoter, we have found that they are more than committed to the success and growth of Ashok Leyland. Many times we have been into discussions with them as to how Ashok Leyland can move forward in fulfilling its vision of being in the top 10 global CV players. So I can assure you that they are fully behind the company.
The management there of Ashok Leyland, multiple news flows surrounding the company there as well with regards to the promoter pledge and the decisions in the UK market, but the stock recovering from the opening lows. We'll take a short break, and just before we do that, here's some good news for our viewers. India's business news leader is now just a click away, and that is CNBC-TV18's all-new app where you get in-depth articles, breaking news and financial world updates right at your fingertips. You can download the app from the Apple Store or the Google Play Store, or you can even scan the QR code that comes up on your screen to get the app. We take a short break, back on the other side.
Important was it for you to move domicile back to India? What was the motivation there?
When we think about where do we go public, it's a very clear answer that we will go public in India because this is our home ground.
It's a heavy cost, but it's a small price to pay.
When are we looking at a possible listing?
That's minimum 2 years away.
You've spent the last 1 year trying to recoup market share on account of the embargo that the Reserve Bank, for instance, had put.
When this industry started, when we started 10 years back, we were not regulated. This space was not regulated. In the last 10 years, digital payments have grown massively. So I think it's kind of coming of age.
When do you take a call that, okay, we bet on this, it didn't work out, let's shutter this and move on to the next?
Happens very frequently when you're an experimental log, when you're trying these moonshots. A lot of times those moonshots will not reach the pace that you want them to reach. It's okay to take a pause, move it to something else.
Origins of Razorpay, 99 rejections before the 100th one finally succeeded.
It's not about me, right? It's not about me, and also
It sounds like relationship advice.
It's very important to not take things personally, as simple as that.
Welcome back. Still 110 points higher on the index, holding on to the gains and respecting, of course, levels on the upside as well. We're moving on to an exclusive then. Sources are telling CNBC-TV18 that the IT ministry has prepared a cabinet note on electronics components PLI, likely to be sent to the cabinet for approval later this week. Ashmit is joining us now with more details. Ashmit, what are your sources telling you?
Well, it's been a long time coming. There's been a lot of talk, a lot of speculation in terms of which way the electronics components PLI is headed. We spoke to highly placed sources within the government. What they tell us is that finally the cabinet note has been prepared. It will be put forth. It will be sent up to the cabinet for consideration and for subsequent approval. This is a decision that had been in the waiting for a better part of the last 3 to 4 months. Now, what's important here, let's break this down as to what we can expect from this electronics components PLI. As the name suggests, it's directed at the electronics components like batteries, displays, camera modules, printed circuit boards. That's the direction in which it will be heading. This is important given that how it comes on the back of the specs scheme, which in fact ended in March of 2024. So this takes on the baton from there, the electronics component PLI. What's important is that the figure, the outlay that we're looking at is north of 25,000 crore rupees. So that's a big amount. However, let's bear in mind that the industry had sought an even bigger amount of 40,000 crore rupees. When asked on what this industry demand is, as opposed to the outlay, what government sources are telling us is that for now they're going ahead with 25,000, but they're keeping an open hand, they're keeping it flexible, they're open to the idea of reviewing the outlay subject to the response that the industry furnishes to the first round of this PLI. That's one. As far as what we can expect, what the government is expecting in terms of investments, well, the figure that we're hearing is in the range of 40 to 45,000 crore rupees of investments is what they're expecting in this electronics component ecosystem. And bear in mind, this is critical. This is part of the larger government strategy to aim for that $500 billion in electronics manufacturing by 2030. That's the pursuit that the government is after. The government's hope and aspiration is that this PLI, like it did for mobiles, will help bring the larger players come together for the electronics ecosystem here in the country, and that will eventually lead to greater localization and greater value addition from within India. Back to you.
Okay, all right. Thanks a lot for that, Ashmit. Well, let's focus on a couple of other names. NBCC, that gains after it signs an MOU for a particular project. Vivek joins us to tell us more about that. Vivek?
Well, a very interesting development and an announcement made by NBCC post-market hours yesterday. The company said that it has signed a strategic MOU or Memorandum of Understanding with Mahatma Phule Renewable Energy and Infrastructure Technology Limited. This particular collaboration is to jointly undertake consultancy, fee-based EPC and redevelopment projects, and this means that NBCC is now entering the redevelopment space within the state of Maharashtra. What are the targeted projects of this particular platform or the MOU that has been signed? Number one, cluster development projects in the Thane region, data center projects, renewable energy initiatives, some rehabilitation projects in MMR, which is the Mumbai metropolitan region, and also residential products under the Pradhan Mantri Awas Yojana. Projects, the company says, has an estimated value or a scope of close to 25,000 crore. Important to watch is what are the projects that NBCC gets into its kitty, what will be the fee that NBCC gets, and what will be the eventual targeted timeline that NBCC will eventually be able to garner from this particular development.
There's interesting developments there for NBCC, 25,000 crore rupee MOU. So we keep an eye out on that. As Vivek was mentioning, what projects will eventually fall into their kitty remains to be seen. But moving on, Aadhar Housing is another one that has been doing well in today's session, and that is after DAM Capital has initiated coverage on the stock with a buy recommendation. Vinny is here to tell us more on that. Vinny.
Absolutely. So we are seeing Aadhar Housing that has been buzzing in trade today. Like you mentioned, DAM Capital initiated coverage, buy rating, target price of 525 rupees per share. What are the key highlights that they're seeing is working out for Aadhar Housing, and why are they positive on this one? There are two key areas they believe is working well for Aadhar Housing versus peers. One is in terms of the geography that they're present in, as well as the holistic mix that is there for Aadhar Housing. Now, in terms of housing loan versus non-housing loan as well, the company has been focusing on increasing and scaling filling up the housing loan versus the non-housing loan segment. So that is something that they keep a keen eye on. Other than that, growth target given by the company, 20 to 22%, is something they believe would continue for the company going forward. And also in terms of the ROAs, that's the return on assets, are quite high compared to the peers. ROE is also at doing quite well for the company in terms of peers, what other housing is seeing, and especially peers like Aavas Finances is something they are much better in terms of the ROEs and ROAs as well. Other than that, the company is also in terms of the stock that is trading at in terms of valuation, it's 2 times its book for FY27 and 13 times its book for FY27 in terms of earnings is what they're keeping an eye out on. They expect ROEs to be in the range of 16 to 17% over the next couple of years and could be at 18% in terms of the peak level that they could expect over there. So quite positive on this one is the view coming in from DAM Capital.
Okay, all right. Thanks a lot for that, Vinny. Well, time to slip into a short break. On the other side, Aditya is waiting for us to give us some trading strategies. Don't go anywhere. Welcome back. Wipro is buzzing in trade on the back of a big order win from UK's Phoenix Group. Rima joins us to tell us what are brokerages making of this big order win. Rima?
Thanks so much for that. So indeed, Wipro's won a mega deal, £500 million, which is about $650 million US spread over 10 years. So incrementally, it could add close to about 0.5, 0.6% to Wipro's top line. And remember, the company that they won the order from, UK's Phoenix Group, already has a long-standing relationship with TCS. Actually, that's what makes Kotak very bullish. So they're saying this deal is notable because it marks Wipro's entry into an account which has been a stronghold for TCS. Also, this is the second mega deal that Wipro has won in the last 4 quarters. According to Kotak Institutional Equities, the deal will ramp up from December of 2025 quarter, that's Q3 FY26, and fully ramp up by the end of FY26. Initial profitability of the deal will be low, as is the case typically with mega deals. But according to Kotak Institutional Equity, Wipro will be able to make up for the margins and hold on to margins of about 17.5% through the duration of the entire deal. That said, even though Kotak is enthused by this mega deal win by Wipro, they still have a sell rating on the stock with a target price of 265. They're cautious because, a turnaround requires many things to go right at the same time. It is challenging. And while Wipro's growth, underperformance versus peers will continue to narrow, it will still underperform its peers. Morgan Stanley, too, acknowledges that this deal should support expectations of a pickup in revenue growth for Wipro in FY26, especially in a volatile macro environment. They too have an underweight call on the stock, and their target price too is 265.
Every time there are positive developments on Wipro, it somehow just does not manage to convince the street at all. And even though one of the few nifty stocks that has more consensus sell recommendations than buy recommendations, but still holding on to gains of around about 2% is a Wipro. It'll be interesting to see what the numbers look like when they come in a couple of weeks' time. But for now, shifting focus back to the markets, the Nifty is exactly where it was at the start of the show. 23,600 is where the index stands. Where is it headed now after that bit of a hiccup that we had in yesterday's session? Aditya Agarwal of Invest for Edu is joining in on the show now. Aditya, good afternoon. Thank you for joining in. We got to 23,800 but failed to cross it. Had a bit of a hiccup yesterday, but then that dip has been bought into today. What are the charts indicating now for the index and also for the Nifty Bank as well, because that's the one that's keeping the index higher? And what are your stock recommendations this afternoon?
Hi, afternoon, Albert. Thanks for having the show. Afternoon, Nigel, as well. Oh, that was a blip, I think so, in the sharp up move that we had seen for the last 7 trading sessions. Yesterday was just a pullback. Maybe I would call it more as a breathing space, giving traders an opportunity to go fresh long on the index. 23,400 on the downside will continue to act as a very strong support area. I believe market is poised towards the 200 DMA, which is somewhere around 24,000 on the upside. So maybe come next week or the week after that, we will definitely see Nifty inching closer towards 24,000, and I don't have any doubts towards that because markets have become a little comfortable now. The negative news is out of the way. It's getting priced into as well. So I believe one should look at fresh long additions both on the Nifty and the Bank Nifty. For the Nifty, 23,400, as I mentioned, is a good support area. Can test levels of 24,000, 24,100 on the upside, which is where the 200 EMA is. And as you mentioned, Bank Nifty is the main driver in this up move, and I think it is likely to continue in the coming trading sessions as well. On the upside, easily 52,300 to about 53,000 is something which I think Bank Nifty can easily scale past. And within this, I think it will be the PSU lot, Hormuz, which will take the Bank Nifty higher. Especially, I think SBI is one stock which should be on the radar of all the traders, and it can easily see 5 to 6% upside from current levels.
What about specific stocks?
So I've got a couple of buy recommendations. One is GAIL. I think this entire space, energy space, is buzzing around, and GAIL is one stock which is looking interesting to me at current level. So I would go ahead and buy for a target of 190, place a stop loss at 172. The second sector which has been buzzing around and looks very interesting is the cement space, and I think there are pocket full of stocks which still offer good upside potential from current levels. Looking at Shree Cement, this is one stock which has broken out into an all-time high territory from a good consolidation phase. Risk to reward is in favor of going long at current levels. As we speak, stock is making new highs. So I'll buy for a target of 34,000 on the upside, place a stop loss somewhere around 29,500 on the downside.
Okay, all right, Aditya. Good to see you in after a while. Looking forward to catching up with you in the time to come. Thanks a lot for those calls. Well, today's expiry day, so things will get even more volatile from here on if it's not volatile enough. So let's tell you about a couple of levels that we are tracking. This morning we had mentioned that, the Nifty ended at around the 100 EMA Hormuz. And in fact, the 200 EMA is the line in the sand, which is at around 24,000 odd. If we can get past that, I'll tell you what, the bulls will feel very, very good. Looking at the options data, the sense you're getting is that the lower levels, 23,450, can get protected. Why do I say that? Because we have aggressive writing that we're seeing at around this 24,600 put as well as 23,500 put or thereabouts. So that's going to be important, 23,500 put. On the call side, though, the 23,600 call, well, that's seen aggressive writing as well in today's trading session. And that's going to be the important one. So that's telling you at higher levels, we can see some kind of a resistance out there. So the range you're getting is on the downside, 23,450. On the upside, 23,650. As of now, positioning is such that we don't get past the 23,650. But that's going to be important. If by chance we can get towards that level, you'll see a massive bounce in the final hour of trade. So that's going to be important. Reference on the low side you have. And as we mentioned earlier today, the Nifty Bank, that's the most crucial index for today. Given the global uncertainty, you want to look at a sector that seems reasonably protected from this tariffs and the likes, and also where valuations are pretty okay. And with the FIs showing us the money, the most of their holding here in the Indian markets is financials as well as bankings. So that could be the sector that could lead the way from here on if we need to get up. The 100 and the 200 EMA, that's the closest support level that we have, the reference point on the downside.
Indeed, and you keep an eye out on the Nifty Bank because that has been the outperformer in the recent past as well. That has ensured that the Nifty stays higher as well. The Nifty, as you mentioned, 23,450 was the level that Nigel was mentioning on the downside. 23,412 is the low of the day. And 23,650 on the upside, we've reversed from, or we are finding some bit of resistance around 23,625, which is the high of the day as well. By the way, when we started the show, we spoke of Capri Global. That was up 10% at the start of the show. It's up 14% now on very strong volumes. We had to determine what's causing this surge. The stock was up in a very strong move yesterday as well. So Capri Global, top gainer on the Nifty 500, 13.5% higher there. But Bharat's growth story is being driven by leaders transforming policy into real progress, and you can hear directly from them at the News 18 Rising Bharat Summit 2025 on the 8th and the 9th of April at the Bharat Mandapam in New Delhi. This is an exclusive opportunity to hear straight from Nitin Gadkari, the Union Minister for Road Transport and Highways on infrastructure-led economic transformation, Hardeep Singh Puri, the Union Minister of Petroleum and Natural Gas on shaping Bharat's energy resilience and global positioning, and Ashwini Vaishnav, the Union Minister for Railways, Information Broadcasting and Electronics and IT on advancing digital infrastructure, mobility and communication. You can get your tickets today for the summit that defines what's next for Bharat. You can book your passes right now with the QR code on your screen. Welcome back. Now, there has been a lot of uncertainty around the Trump tariffs as we have been talking all through the day, and the markets have remained on the tender hooks. Now, to dive deeper on this tariff issue, our colleague Prashant caught up with Sunil Kaul, the global emerging market equity strategist at Goldman Sachs, and spoke to him to get a broader understanding of the impact that it will have on India and other global markets. Listen in.
Our sense is that, look, India will be one of the many trading partners that will likely get sort of be included in the reciprocal tariffs. I think the Office of U.S. Trade and Representatives, they sought inputs from 19 other trading partners. Out of those, 15 have trade surpluses with the U.S., which covers close to 90% of the U.S. imports, right? So India would be one of the 15 trading partners we think that could come in the reciprocal tariffs. I think if you just looked at the rate purely on the basis of product by product weighted average reciprocal tariffs, which is that if US matches sort of India's tariffs on each of the products, that effectively is about 11 percentage points of higher tariffs on India. But then I think we also have to keep in mind that the number could be a bit higher because of non-tariff measures like subsidies and import bans, and there are also kind of VAT. And so there is a lot of uncertainty whether the US does include VAT, does not include VAT. Europe is obviously a large risk there as well. So depending on what the number could be, it could be north of sort of pure 11 percentage points, which is based on the weighted average tariff rates.
You and I are talking about it, and people around dealing rooms and in institutions are talking about this. You are talking to clients as well. So in a way, if this becomes the view that, well, start with a big number and then walk back, will markets react in a very negative way? Maybe we get a bit of a dip globally and then that gets bought into?
Yeah, I mean, that's a great question, Prashant. I think the way this has been sort of getting sort of asked in our conversations is that, is April 2nd the clearing event in that sense? Is that, okay, so they announce stuff and then the market sort of looks beyond it, so now it's already announced and that's a clearing event for the markets. Our sense is that it could still be an initial shock, as I said, because the numbers will be higher than what the market is currently anticipating. And then there is a room for negotiation. There's a window for each country, in which case I think there will still be sort of uncertainty in the market. So I think the way we sort of think about it is that you probably continue to have some uncertainty related to tariffs over the next sort of 30 days before things start to get 30 to 60 days before things start to get clearer in terms of what the final tariff rate would be for each of the countries. And so I think this will be something which will be an overhang for us for the next couple of months.
Here in India, there have been some news reports. Reuters reported that India is looking to cut tariffs on half of its sort of, imports, US imports into the country. So it's fluid out there, right? I mean, so this is also obviously a little bit of posturing. I mean, showing the other side that we're willing to work even before and preempting some of this. So any thoughts there?
Yeah, I mean, exactly as you said. I mean, as we know, the U.S. Commerce Ministry was in Washington a couple of weeks back, and obviously there have been talks with India, similar to the other countries as well. So I think it's all a part of the deal or the negotiating tactics, as we just mentioned, Prashant. And so, I mean, it could very well be that, as you said, India would reduce tariffs on some of the imports well ahead of this, or even sort of post the actual announcement, because the announcement, as I said, the implementation would be delayed, right? So India could still kind of implement these things post the April 2nd announcement. They could sort of also increase the purchases of sort of defense, energy related imports from US. And so I think each of the country will probably try to negotiate, probably try to lower tariffs in some categories where it's too high compared to what US is charging. And then also sort of increase some of the spending in areas of defense, energy, which US is keen on. And so all of this will be probably part of the countries showing US that they are willing to work with US and come to a more reasonable deal.
Sunil, what about, let's talk about sectors. I mean, agriculture is a big area. Any thoughts there? Agri
is a big area. I think agri has the largest sort of tariff differential if you do sort of US versus India. I mean, so that could be impacted. But we think, for example, like pharma could be an area that could be impacted as well. autos. I mean, in addition to the reciprocal tariffs, we also think that overall in the tax measures, you could see a global sort of auto tariffs. You could see tariffs on critical imports. And when we think about critical imports, electronics and components is one of the things the Trump administration has talked about. So you could see autos, you could see electronic and component sector, you could see pharma getting impacted as well. In addition to, I think the agri and the textiles, their tariffs are one of the highest. But if you think about the more likely products, I think things that are sort of more in critical imports categories that are more in sort of autos and pharma could be impacted more.
Is it possible to form a view on the markets with all of this uncertainty? Do you have one? The 1st of April, we'll also have these middle-class tax cuts which come into force, effect perhaps a few months later. 9th of April is the RBI, maybe a rate cut. What's the view on the market itself here?
Look, I think, Prashant, as you may recall, so we had sort of downgraded the market from overweight to market weight back in October, so about 6 months back, and the view there, and it was largely on the back of the cyclical growth slowdown, right? So fast forward, we already seen markets have come off, valuations for the large caps have come off, but our general sense is that on the domestic side, your growth has kind of bottomed out, but it's still sort of going to be a gradual recovery in here. You still have policy, especially on the fiscal side, which is somewhat restrictive. We still have earnings cycle, which is still seeing more downgrades than upgrades. So we still think there is a couple of quarters of downgrades left. We still know that small and mid caps have much higher valuations, and the positioning there is still not cleaner, especially within the domestic funds, right? So there is still sort of more risks on the domestic side, even though I think the worst is behind us. But then on top of that is what we were discussing on the global side, which is that you have the impending reciprocal tariffs that could come and hit us, which will be with us for a while before things stabilize there. And so because of all of this, we still think it may be a little too early to take broad-based exposure in the market. So we are somewhat sort of cautious in the near term. I think we are kind of much more sort of alpha focused, looking at companies and sectors where you got sort of higher earnings visibility, more stronger balance sheets, and sort of more quality bias.
Welcome back. Well, a good time to get you a strong technical voice. We have CLSA's Lawrence Blanco, who believes that the Nifty will move towards 26,000 mark. He adds that private banks can lead the up move in the market. Let's listen in to what he had to tell us earlier today.
I think the worst is over. I mean, there were two things we were looking at. One is, in the third, fourth quarter of last year, we had this topping pattern that suggested you trade down towards a 21,800 to 22,800 zone. And that was basically the trading range that you had prior to the India elections in June of last year. We fell into that range. And the big thing that we saw last week that really sort of improved the technical landscape was, one, we broke above the 50-day. And what was different about last week's break above the 50-day versus December's break above the 50-day is that we had this breadth thrust signal. And now what that measures is the number of stocks within the Nifty making new 4-week highs. And typically when that gets above 55%, we have a really good hit rate looking at it on a 90 or 250-day basis, that the Nifty is up over 13%. So, that would suggest that we revisit the highs. We trade back over 26,000 banks as a key sort of relative ratio. And, in the correction that we had from the September highs into the lows in February, that the private banks actually fell less than the PSU. So they did fall, but they fell less. And now that we've started to see things turn around, we've seen that private banks continue to outperform. So, banks have held up relative to the Nifty. That's still a leadership market since essentially the second half of last year when we started to see the improvement in the banks. But, just getting more granular within that banking space, it's the private banks that really sort of stand out. You've seen breakouts in Kotak Bank after being range-bound for the past 2.5 years. You've seen HDFC sort of reassert itself after its breakout, and you've seen ICICI trade back to its all-time high. So, that's a key sort of focus area. And then you've got some of the non-financial banks like Bajaj Finance and other sort of big multi-year trading range breakouts. So that's really where the interest and momentum is right now.
Welcome back. On to some commodity action then. Citi is now saying that gold prices can go up to $3,500 an ounce if concerns on US growth remain higher due to these reciprocal tariffs if they are implemented by President Donald Trump. Manisha Gupta caught up with Citi's global head for commodities, Max Layton, and spoke to him on precious metals and their outlook going forward as reciprocal tariffs loom. Listen in to that exclusive conversation.
We think gold price is going to keep going up. Bottom line is we're in the underlying drivers, the physical and we would say fundamental drivers of this gold bull market remain in place and will continue to drive gold all the way up in our base case to $3,200 an ounce over the next couple of months, and then potentially up as high as $3,500 an ounce if we're in more of a concerning US growth environment than what we have in our base case.
Max, also, where do you see all of this buying coming in from? I mean, we do understand that the central banks are buying and ETF buying has also been quite strong. The kind of gold that we've seen being shipped from UK to US is yet another story. But to take the prices from where they are to 3,200 and 3,500, where is this new buying going to come from?
Yeah, I think you've named all the core recent drivers. We think a lot of them remain in play. In particular, President Trump and his team, they've mentioned some pretty high headline tariff figures on April 2, on Liberation Day, as President Trump's calling it. And these kinds of tariffs, if delivered, even if half of them are delivered, are going to be concerning from a global growth perspective, but also from a US growth perspective over the next 3 to 6 months. So that would kind of cement, in our view, a continuation of what we've seen over the last couple of years, which is a very gradual slowing in US economic growth. Around that, in the past, we've tended to see savings rates rise, ETF demand rise alongside that, with the driver of both being precautionary savings from households. And we think this is kind of going to take you that next leg higher over the next quarter or two.
Max, also, what is your sense on the silver prices? Because the prices have had strong fundamentals, the industrial demand deficit, but we haven't seen $34 an ounce break on the higher side. How are you looking at fundamentals and the price move from here?
Yeah, I think stepping back, this silver price is fantastically high versus mining costs relative to, even if you take a 50-year silver chart, this is a pretty high price by historical standards. So, silver's done well. It's doing well. It's up, it was trading in the low 20s a bit over a year ago. So, the price is doing extremely well. It perhaps has, disappointed some of the kind of, stronger bulls. It hasn't exactly significantly outperformed gold. So it hasn't been the leveraged kind of play to gold that a lot of people were looking for. And really that all comes down to the soft global growth environment. So, we think silver, it's got a lot of exposure to a bigger than expected China easing, for example, or and it continues to kind of, probably give you roughly the same, maybe less return than gold over the next couple of months. I think the thing that's stopping us getting super excited about silver, and we are modestly bullish from these price levels over the next 3 to 6 months, getting up to $34, $35. The thing that's stopping us is this tariff threat from President Trump. So less tariffs than expected, together with some China easing, and silver can come in more in line with our bull case scenario towards the $40 mark.
We've spoken so much about tariffs, Max. Going forward now, what is the worst case scenario or the best case scenario when it comes to tariffs going forward?
I would say one of the worst case scenarios is that the reciprocal tariffs that US Commerce Secretary Lutnick said that their finding was that would raise $700 billion, that those are enacted fairly immediately and that those are not redistributed. On top of that, that you have a higher headline number than the 700 billion because because the administration might want to negotiate down from an even higher number. So kind of worst case scenario for me on April 2 is a 15 to 30% tariffs across the vast bulk of the imports implemented immediately and not redistributed to people either through no tax on tips or to kind of middle income and lower income people on incomes less than 150,000 US dollars. I mean, if that happens, that's the worst case scenario, I think. The best case is for me is, something like 5 to 10% tariffs, which would still be a pretty big headwind for global growth, in my opinion. And for metals and commodity markets more broadly, and that they are kind of either phased in or industries with complex supply chains are given time to phase in, and that the revenues raised are near immediately redistributed. That would kind of minimize the impact of the shock. On top of that, China and Europe stimulate to kind of offset the impact on their economies. And in that scenario, I think, you can be looking at what US Commerce Secretary Lutnick mentioned about, President Trump and their team owning the economy from the fourth quarter of this year, which would be essentially that the fourth quarter growth outlook is better and even better into 2026. So that's probably the best case. And even then, we've got some pretty serious adjustment to global trade coming over the next 3 months.
An exclusive conversation there with Max Layton of Citi on gold and all things commodities. But with that, we call time on this edition of Halftime Report. From Nigel, me and the team that put this show together, thank you so much for watching. We leave you with the Nifty still at 23,600. Business Lunch takes the action forward.